Well, the new millions that will be earned by the backers of LinkedIn, the first major U.S. social media company to sell shares to the public, begins trading on the New York Stock Exchange this morning in a little under an hour. For more, we're joined by Bob Rice. He's the general managing partner at Tangent Capital, as well as our friend of the show and Bloomberg contributing editor, Nick Thompson. Great to have you two with us. Bob, let me just start with you, because I thought you had a really good question when you were writing through some of when we were talking with you, before this interview. Why does LinkedIn even need to raise money, right?
Precisely. It in a way, it doesn't really, because it's a very low capital intensive business. They don't need that much cash to grow a business like this. Really don't need a few $100 million. But what they did need, they could have easily raised from venture capitalists without any problem. So it really raises the very, very interesting question, basic question of why did they do this? What's the point of the IPO?
So why do you think?
Well, I think that, frankly, to me, I think it's a stretch to look at this IPO and think it's a good valuation for investors. But if you're going to try to make the bull case for this, you would say the bull case is, and the reason they did it was, that they now have a currency that they can use to do acquisitions of other social media companies that are young and promising. Back in the first tech bubble, that was always the idea, was to go public so you would get the currency and then you could buy up everybody who was in an adjacency. And I think maybe that's the idea here. At least I think that's the best reason for having done it.
I would think they're doing it to get rich. I mean, the investors and the founders and the employees, I mean, that's why I do it. Sounds like a perfectly good reason to me. Well,
yeah, except that most of these guys aren't selling now and can't sell for at least a year.
I know, but if they're going to go public in 2 years, this at least moves that forward 2 years. They're going to get rich sooner, if not today, and some people are going to get rich today.
Well, but that raises what we've heard about on this program and talked about with LinkedIn, is that they're just trying to cash in on this now before all the others come, before Facebook and Twitter and Groupon come out.
Well, that's certainly true. I mean, the first one is going to get most of the kind of pent-up demand for social networking investments. And so, from that point of view, it's a smart move, certainly for the selling shareholders, who I note include Goldman Sachs. Now, that probably, I call that a tell in the poker world. When Goldman Sachs, my Goldman rule is when Goldman sells, I don't buy.
Right. You're never going to come out in that trade. Well, Nick, the retail investor, I mean, basically it sounds like you're saying that the retail investor eventually will be crying in his or her soup if they buy into LinkedIn.
No, I'm actually, I've been talking a lot about overhyped stocks, and I've talked about Renren, which I thought was overhyped. There is real value to LinkedIn. I mean, they don't have any revenues right now. They don't have any profits right now, but they do have $500 million in expected 2011 revenues. Mm-hmm. They do have 3 business streams, right? They sell ads on the site, they have premium subscriptions, and most importantly, they have jobs. They do have an incredible amount of data. They serve the demographic everybody wants to serve. It's rich networking people. They have tons of data on rich networking people. You can turn that into money. So I don't think it's a crazy company. It's certainly not like the bubble 12 years ago, where there were companies that had no revenue streams, no idea, no data, no nothing, that were valued at much higher valuations. So there is something to LinkedIn. This $45 a share is a $4.5 or $5 billion valuation, the right one. Well,
and that's where you stand, right? I mean, there is some value perhaps to the company, but it just not at the value that it's being.
Oh, there is definitely value, and I think Reid Hoffman really should be congratulated for having really slowly built up something out of the social networking system that is practical and useful, and people do, in fact, use it for things like doing job hunting and connecting with other executives. It's got real value, but this kind of value to me seems over the top. I mean, frankly, it's one of the things I like to point out is it's not the first public social networking site to focus on this space. There's a German company called Zing that's been public for like 5 years.
In Germany.
In Germany. They're more profitable currently than LinkedIn, and they have a PE of 30.
Well,
LinkedIn's PE is, I don't know what it is, 250? It's a little bit hard to justify.
But there's also questions, right, about the numbers of LinkedIn, aren't there, about the actual users that they have? Are there not?
There are definitely questions about that, and they admit in their IPO prospectus that, we have tons of users, but actually none of them really use the site. It's just a small number of people who use it. I mean, you probably have a LinkedIn account. You probably don't check it. Most of the people watching the show probably have LinkedIn accounts.
Without having ever signed on, I have somehow get emails in my inbox about my LinkedIn account. But anyway.
Right, but you don't go on. I mean, it's one of those things. I don't know exact numbers, but I would say 5% of the users are 90% of the hits, or something like that, or 10%, 80%. There's a small number of people that have a phenomenal amount of the use of LinkedIn. So that's a question. So when they say we have X million users, you get all excited, but it's a smaller number than that.
Right, exactly. They don't have the same kind of engagement with the user base that a Facebook has, and that's why the Facebook people are saying, Oh, well, yes, that's a $4 billion valuation, and we're really up at 50 or 60 or 70, or if you want to take some of the secondary market trades,
Right.
80 billion, because
Right.
we have, 5 times the users and more engagement. Whether that math really makes sense is a different question.
And why would you go on to LinkedIn every day? You go on if you want to look for a job, you go on when you update your resume, you go on every couple of months. If you're posting a job, you go on all the time. So if you're
Right.
actively job hunting, or if you're actively, but for most people who are gainfully employed, there's not a real reason to go on all the time. So.
Unless you're looking for some contact or some contact information.
Right, if you're looking for sources or something, you're looking for people to talk to.
Bob, who are the hidden winners in this? I mean, we know outright Reid Hoffman and the other backers, but who are the hidden winners in this?
Well, one of the things that I think is kind of interesting here to look at is what this does for the ecosystem of pre-public companies. So exchanges like Shares Post and Second Market and some of the other ones, and now they're popping up kind of almost every day, frankly, are kind of winners here because, frankly, people who bought these shares in those markets without really knowing very much at all about the underlying dynamics of the companies wound up making money because there was this huge 30% move this week, which also tells you something about the valuation in the expected IPO valuation.
Right.
30% in a week, that's a big move.
200%, 2,000% in a year, whatever it is right
Yeah,
there.
it's complete. And so but what that meant is it kind of bailed out all the people who had bought these shares on the secondary market. So they all made money. And
Right.
I'm a little bit afraid that people are going to learn the wrong lesson here, which is, oh, yeah.
Let's do it again. Let's do it again.
Do it again. Do it again.
This
Okay.
isn't an example of a bubble company. Even if this is a real company, it will fuel the bubble that we're starting to see build in tech because of its success in the second market.
Precisely.
That makes lots of sense.
Nick, Bob, thank you very much for
Thank you.
joining us.